Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, Friday's session was very volatile after the US dollar index, which measures the greenback strength against a basket of six major currencies, posted a fresh intraday high of 112.75 following a solid jobs report for September in the US, or the non-farm payrolls. That has increased the likelihood that the US Federal Reserve will barrel ahead with further interest rate hikes. Looking at the data release, the Labour Department reported that the US economy added 263,000 jobs in September, above the market estimate, while the unemployment rate unexpectedly fell to 3.5% from 3.7%. The market expectation for the non-farm payrolls forecast was at 255,000 in September. Elsewhere, hawkish messages by policymakers continue to sing out after the New York Fed President John Williams said more rate hikes were needed to tackle US inflation. With Friday's job data, it has increased the likelihood of another jumbo-size 75 base point rate hike in November. This week, all eyes on the US Consumer Price Index, which will provide a key snapshot of where the US inflation stands. Moving on to the markets, we can see that the Australian dollar has posted a fresh low of 63.42 and is on track to the challenge of 63.30 to 62.45.60 as a key level. It is seen from there the markets may find a little bit of difficulty due to the fact is that we're getting close to the oversold mark and the ADX is somewhat overheating as it heads towards 62 as a level or an index. Looking at the market though, the top side resistance seen at 63.80 would need to be cleared to give further guidance up towards 64.50.60. However, with the dollar recovering, and also the fact is that the market still weighs on the downside for the Australian dollar, I do anticipate some further stops if the market is long above this 63.60 level. The euro has dropped away further from the broad downtrend and therefore looks further to the next target. That is seen at 97.20, which is very close. In light of the weakness in the last 3 days of the bearish candles, the market is likely to continue to weigh on the support, and taking out 97.20 exposes the region of 96.20 to 96.75. With any rebound though of 97.20, look towards a minor resistance at 97.65 with above at 98.15. I do feel though that the technicals are weighing a little bit heavier due to the dollar index rebounding, but it really needs to see how the market starts to unfold into this week to get more of a direction in case we see another retest of this down channel. The dollar yen, after teasing the 145 level, is now cautiously taking the rise towards 145.40.60. I do feel that the Bank of Japan will be checking rates above 145. And as we can see here from previously, that the market did end up very whipsawed. Not a place that I would like to be in at these levels if I was buying, due to the fact is that the risk is still of a further choppy price action ahead and also volatile that could see the market head back to 142 as a potential target. As you can see here, the technicals have improved a little, but the MACD still remains negative. Sterling is still somewhat weighing to the downside since the retreat from 114 around that 80 area, and from that the market is now looking for the challenge that is toward 109.15.75 and reassess from there. Due to Friday's strength in the US dollar, it has dented a lot of the currencies, and therefore let's see if the market first of all respects this level, and if it fails to, then we could be even looking into a more volatile session around 106. Having taken that topside challenge of 1,700 around 25.30 area, the market has continued to weigh on the support and now breaking through the level of 1,700 gives further scope to the downside for gold, that is, and looking towards 1,692 with a key level seen at 1,682 to 83. If we fail to see demand emerge from this level, then we could be looking lower down to 1,655 to 58. The technicals are a little bit heavy, so let's see how it unfolds into the fresh week. Wrapping up with oil, the market has cleared since clearing that level of 88.70, has rallied on and reached its objective of 91.45.65. I still feel there's a little bit more strength due to the ADX, and therefore we could see a spike this time towards the 94, 96.5 to 97 region, or where this cap holds before any downturn. With that being said, though, if we see a break of the levels seen here around 88.65, would negate the top side and reopen the downside to 84.5 to $81 a barrel. Well, that wraps it for the start of the morning and also for the beginning of the week. But please look out for the intraday report and also the end of the day wrap.